Welcome to the Recon Trader. In today's video, I will share with you my extremely profitable double tap live crypto day trading strategy. So let's get right to it. As the name implies, the double tap trade revolves around either a double top or double bottom candlestick pattern found on a regular basis on charts of all time frames. This type of counter-attack trade can be extremely profitable, and the double tap trade is extremely easy to recognize. With that being said, the first key to this trade would be the leg of the second tap, and it's not unusual for the second tap to breach the tap level by a small amount due to stops being taken out that are often placed just below or just above the tap level. Now, after the second tap level holds and price action reverses, while printing a large candle to the up or downside often indicates a probable shift in momentum and adds fuel for this particular trade. Now, let's jump over to some charts and break this trade down a little further. All right, so now we're looking at the Bitcoin USDT 30-minute chart on Binance. We can see the formation of the double tap in the form of a double top opportunity. And so once we get the confirmation of the second tap, what I'm looking for is the reversal in the form of a large candle to print. And in this case, we do get a large candle, and I'm actually waiting for confirmation in the close of this candle. The second form of confirmation that I'm looking for is RSI divergence. And in this case, because I'm looking to go short or bearish, I want bearish divergence. And what that would entail is the RSI is above the oversold level of 80. And then on our second tap, we're actually now below the oversold level of 80, therefore creating bearish divergence as the peak to peak is in a downward slope. So now I have confirmation with a large candle that has printed after the tap and closed, and I have confirmation via RSI bearish divergence. Now, as added confirmation, if the reversal candle can actually close down below the 9 EMA level, that would be another form of confirmation, and it is actually fairly common for that to occur. However, on this particular trade, we don't get the close below the 9 EMA. Now, we'll take it a step further. Another level I'm looking at is what is called the neckline. And in this case, that is this level here. I'll throw in a line. This would be considered your neckline. And another good form of confirmation would be a shallow neckline. And in this case, we get a fairly shallow neckline. If we add the Fibonacci trend retracement level in here, anything that does not breach the 382 level would be considered a shallow retracement back up to the second tap. So that would be more confirmation on this particular trade. And so we end up with a large second candle after the second tap. We end up with shallow retracement and bearish divergence on the RSI. That would be enough confirmation to enter the trade. But before we enter the trade, we need to know our stop loss level and we need to know our take profit targets. And so we'll start with the stop loss, which would be the failure point of the double tap. So if the price action was to reverse back and breach the double tap level, we would want to set our stop loss just above the double tap level. Now, as far as take profit levels, remember, we don't have this part of the chart available to us. So we need to look back and check our 6. Where did this price come from? And the price really truly came from all the way down towards the bottom of the screen here. So our take profit target could be all the way down here towards the bottom of the screen. Now, in reality, I would probably look at this level in here because it was a form of resistance. And a lot of times prior resistance becomes support. So I'll drop a line in here. And so this would be a target area that I could look at for profit. And another level you could look at for taking profit at would be this neckline. So you could essentially scale out your first level of profit at around this neckline and then scale out the rest of your position down around this level. And to take it one step further, you could then add your third take profit target down around this level where the price actually came from. So maybe at the top of this candle where it reversed upwards. So you could take a quick profit here, scale out on your second level of profit, and then get flat on this third level. Now, because we are privy to the future price action after the double tap, you can see all three levels would have been profitable, and we never do breach back above the double tap level. So you don't get stopped out, and you are able to achieve those three levels of profit. Now, let's take a look at another example where we aren't privy to this future price action. So on this particular chart, we get our double tap in the form of a double bottom. We're still on Bitcoin, USDT. This time it's the 1 hour instead of the 30-minute chart on the Binance exchange. And so what we're looking for after the double tap is this large printed reversal candle. And in this case, it does actually close above the 9 EMA. So right there are two confirmations. We get the large printed reversal candle, and we get the close above the 9 EMA. And to take it a step further, we also have bullish divergence on the RSI. And I can pull that up on the screen to show you a little better that the first tap occurs on this level of RSI, just above the 20 oversold level of RSI, and on the second tap, the RSI level has moved up. Therefore, this line between the two taps gives us bullish divergence, which now would indicate the probability of the price moving up and in our direction, and which it does on the very next candle. And in this case, we could take it one more step further. For me, a level I like to look at on RSI is something above the 40 level, and in this case, the RSI is now above the 40 level. As you can see on the close of this candle, RSI is now above 40. Now we're definitely getting into bullish territory. The last bit of confirmation, again, a very shallow neckline. So now we have a very shallow neckline. We have a large printed reversal candle that closes above the 9 EMA. We have bullish divergence on the RSI. In addition to, we have the RSI now above the 40 level. This is definitely a go. But before we jump in with both feet, we need to know our stop loss and our take profit level. Obviously, we won't be able to use the neckline as a take profit level, as the reversal candle has breached that level. So the very first point I see on this chart is going to be previous resistance. And in this situation, that will be my target for profit. And with a take profit target up at previous resistance, that would give us just about a 3% profit. Now let's see what we might have for a secondary target for profit. And if we shrink this down, all right, so looking back at where this price actually came from is up in this level. So that would be my secondary target for profit. And so we know this is about 3%. And this level is going to be right around 9.5%, 10%. So the most I'd be willing to risk would be about 1.5%. And as you can see, the tap line is just over that 1.5% level. And so I would more than likely actually place my stop just under that tap level. And so now we have our two take profit targets and we have our stop loss set. And let's go ahead and see how this ends up playing out. And as this plays out, we have a push up. We've not been stopped out or hit our profit yet. And remember, these are 1 hour candles. There we hit our first level of profit. We could now move our stop loss up to the neckline, where we have seen the price come in and reject from on the wick of this candle. And that would at least reduce our risk, or we could move our stop loss all the way into our entry level, and that would guarantee us profit at least on half of the trade. So that's what I'm actually going to do. Is in most cases I want to lock in the profit I have captured, so I'll move my stop loss up into our initial entry level. So if we continue to watch this play out, and so we get stopped out on this candle, and we would have got stopped out had I chose the neckline as well on the same candle because it wicks down below there. So we capture half of our position worth of profit. We go flat on the other half. So overall, it is a profitable trade. So let's take a look at another example. And this time we're taking a look at ETH on the US dollar on the 1 hour chart on Coinbase. And so what we're looking for is the double tap, which we do end up getting our double tap. We look for that large reversal candle to print and close, which we get to close, and it does close above the 9 MA. Again, more confirmation. And if we look down at the RSI levels, we come into almost the 20 oversold level on the first tap. And then on the second tap, we're now higher at around the 30 level of RSI, which again, draw the line between the two. And that gives us bullish divergence. It's moving up. And another piece of confirmation will be the RSI on the reversal candle is now above the 40 level. If I drop the line in, you can see that's above the 40 level. So we're getting more confirmation. Now, compared to where this price came from, we get a fairly shallow retracement before we get the second tap. And our neckline falls right in this area here. And another way you can actually measure this retracement would be to use the Fibonacci trend-based extension tool that's available on TradingView charts. What I'm looking for is a retracement that is less than the 382 level. And you can see this is definitely just below the 382 level. So we have more confirmation with a shallow neckline. We get the large reversal candle that closes above the 9 EMA. RSI above 40, RSI bullish divergence on the two taps. So again, we have enough confirmation. This is a go, but before it's a go, we got to figure out stop loss and profit targets. So the first profit target is going to be fairly obvious to me, and it will be this neckline. In addition to, I'm leaving the Fibonacci levels on the screen, and the fact that that neckline is right around the 382, that will be our first take profit level. And that take profit level is right around the 3%, almost 3.5 mark. Now my next level that I would be looking at, rather than up here, because of the size of this particular move, I would be looking probably at the 618 level, which would give me a 9.5% profit. And then I would probably scale out my last position up here towards the top, which would be an 18% profit. So let's drop in our two additional take profit levels. So the 618, the 382, which is also in line with our neckline. And then the third profit would be up here at the top at the start of this original move down. Now for my stop loss, that's going to be just below the double tap area. And we're going to drop that in right about there. So now it's time to see what that future price action brings us. And we get our first level of profit right away. And keep in mind, 1 hour candles. We hit level 2. Now, when we hit level 2, I'm going to move my stop loss up. And I'm actually going to bring it all the way up to the first level. And the reason I didn't bring my stop loss up to, like, say, break even, this was a pretty close range, and so I wanted to give the price action room to move. And after we hit our first profit, had I moved that, the very next candle would have taken us out. So now that we hit our second level, I could move my stop loss to break even, but I have enough range in between here that I'll bring it right to the neckline, which is just below the 382. And in all likelihood, if we break this 382 on a retracement, there's a probability the price will continue down lower. So now our stop loss is at the first profit level. We've already scaled out of one position at that level. We've scaled out of now our second position at the level 2, which was 618. And now we're shooting for this final profit target up here at around 1800, which is going to be a psychological level, which you saw it hit and sell off from. So let's see what happens. And we get stopped out. The good news is we got stopped out for our last position at our first take profit level. And so all three positions did end up scaling out for profit. Now, let's let this run a little longer and see what the price action does. Do we pull all the way back down, or do we bounce up off of this 382 level? And I'll speed this up a little. And sure enough, it breaks down and would have gone down below. Had we left our stop loss all the way down below the double top level, we'd have been taken out had we never moved that stop loss up. So that pretty much wraps it up. I just wanted to share with you my double tap crypto day trading strategy that has been extremely profitable for me, and I wanted to include my battle plan when attacking this type of trade. So if you like this video, do me a favor, spike a like. I will be creating more videos that revolve around my day trading strategies, so now would be a good time to shoot that subscribe button so you don't miss those videos in the future. If you have any questions or comments, feel free to leave those in the comment section down below. And remember, never send your money into battle without first doing your recon. See you in the next video.